Yeah, I think the real key insight here is for anyone watching this is to see how structured you are and the way that you're very meticulous in logging everything from how you identified the trade all the way through to managing the trade, as you're opening it all the way through to close, and then having the ability to do the evaluation afterwards. I think a lot of people, when they come into trading, they're not really approaching trading like you would any other business. It's almost like a little hobby, and they don't think of it that way. And I think by seeing your sheets here and you walking through that exact structure, I think anyone who is thinking they're currently trading at the moment, but they're not ticking all of the boxes like you are here, I think that really sort of should hopefully be a little bit of a wake-up call to them to make sure that they need a fully operational, fully functional, fully thought-out trading plan to this level of detail if you want to have any sort of continued, consistent success. So it's great insight.
Yeah, well, I mean, the record keeping is a key part of your trading. How do you know how you're managing your risk, where you're at in the market, unless you're keeping records? And it is a monotonous part of trading, but for me, all I have to do each day is I can look at my Smart Trader spreadsheet and know up front, do I have any heat available today to open a new trade, and do I have capital available to open a new trade? So it's just looking at one sheet and knowing that up front. So it takes the guesswork out of trading and allows you to manage your risk.
Yeah.
Okay, so let's get into seeing some actual real trades that I've done recently. So I've tried to give a range of scenarios in here, excuse me, from, they're all focused on long trades because I'm going to focus another presentation on short trading. Winning and losing trades, so you can see how I handle losing trades as well, and a range of different exits, so both systems in here. So this is a recent trade I took on Jindaobi Metals. It's actually a channel trade. It came up in my daily trading system, and I've got a chart here and with the candlesticks, and underneath some of the candlesticks are small blue arrows, and those small blue arrows is basically the expert advisor that you can use in Metastock, and it has my entry system coded into it. So if there's a blue arrow on the chart, it means when I ran my scan that day, that share came up. And the blue line underneath is my trailing stop loss. So each time the share makes a new higher close, that stop loss moves up. And it's just a matter of me going into the CFD platform, the CMC market maker, and I can just open up the stop, click on edit, and I change the price if it's moved my way. And that's what I do of an evening after the market's closed, is do I need to change any stops tonight? And it's just a matter of editing them. So I saw this share, and when I looked at the chart, I could, oh, sorry, I'm going a bit further ahead there. I accidentally pressed the mouse. There we are. So I saw this chart, and I could clearly see it was in an upward channel. And I thought, well, this is a great trade to take within a channel. I can see it's bounced off the bottom of its channel line, and it's bounced up quite strongly. It's come up in my system. This would be a fantastic channel trade. So I entered in this trade, and I put the top channel line on there, and I trailed my stop loss. So I went into this trade with the goal of, if it falls away from its top channel line, I will exit. If it hits my stop at any time, I will exit. If it breaks out of its channel line, I will stay with it if it breaks upwards, because sometimes they can break outside those lines. I'm a huge candlestick fan, so if I see any candlestick patterns, strong reversal ones, then that's something I will use to exit, but only for this style of trading, like such as a channel where something's hitting a resistance point or a top channel line and it's falling away. So I entered this trade. It retraced a little bit, that's fine, but my stop loss was far enough away that it didn't have an issue with that, and then it moved up slowly, and it would move up and retrace and move up, retrace, and then partway through it just went bang and zoomed right up to the top of its channel line, going up every day, and it hit the top of its channel line, sort of tried to break outside of it, but then rejected it with a black candle and a nice long wick. So when you see a long wick on a candle, that's rejecting higher prices. And when it closed inside that channel line with the wick outside of it, that was a sign to me that it's rejecting the breakout from the channel line, and it's most likely going to retrace from here. So I could simply just wait till it hit my stop, or follow the rules that I set out in the beginning, which was to exit if it failed to break through the channel line and appeared to be falling away. So overall, I held that trade for 55 days. So as I said, I've got an average hold time of about 30 days with this system. I could hold a trade for 10 days. I find the losing trades are held for a lot less, the winning trades held for a lot longer. And I made a 34% return on the total trade size and a 340% return based on the 10% margin that I had to outlay on the trade. So that's a nice little channel trade there that I was made aware of with my daily trading system. So moving on to the next one, Energy World. This is a good one to show you how I handled windfall profits. So I entered into this share. It actually came up in my daily system at 3:30 that day, but it actually closed a lot lower by the end of the day, and because I run my scan at 3:30, it's whatever the share is at 3 p.m. that day, whether the last traded price was at 3 p.m. So sometimes it might be my scan at 3 p.m., but it might not be there at 4 p.m. when the market closes if things have changed. So it was there at 3 p.m. The share had broken out the day before. The next day it had a gap move with strong volume above average, and was probably the candle was a lot higher up at that stage. It didn't have the big wick on it at that stage, and so I entered in before the market closed. Share didn't do a whole lot to start with, and then wham bam, it rose about 60% in one day. Well, 60% in one day is not a normal move. Somehow my computer just keeps taking over. I haven't got my hand on the mouse there. Sorry about that.
No, that's all
so
good.
60% in one day is not a normal move. So that was a reason for me to take windfall profits. Now windfall profits, I can basically sell half and keep the other half to my trailing stop loss, or I could tighten the stop loss on the entire trade. Now I decided, well, this is definitely not normal market activity. I want to sell half and protect some profits. And I like to sell half because for me, I used to exit a lot of trades the entire position because I'd panic, and you could feel that fear coming in, fearing losing profits. And sometimes shares could keep going higher and I'm not in them anymore. And then I'd beat myself up because I've exited too early and I'm not in them. So the sell half strategy for me takes all those feelings away of beating myself up if it continues to go higher, beating myself up if it falls lower and I'm still in it. So if I sell half, I protected some profits. So I sold half on this. The share did retrace, and then it came back up to the point, not up to the high of the wick of its candle, but came up to where its highs of its closing prices, and then it fell away. So when it started to reject and fall away, I tightened my stop loss up. So I have a rule that if I start to not like what I see technically in the charts, I can also tighten my stop up. So I tightened my stop and I was exited out of the remainder of the trade at 47 cents when it gapped down and my stop was automatically hit. And because I use automatic stops, I just automatically get sold out at any time of the day. I don't have to watch it. I don't have to manually exit. It just happens for me, and I love it that it happens for me. And that, because things happen sometimes and I might not be able to get home and trade that day. So I held that trade for a total of 54 days, made 41% on the total trade size, which was 406% on the margin outlay.
Yeah, great trade.